Adrian Schmidt is foreign exchange strategist at Lloyds Bank. Good to have you with us. So,
morning.
The euro down against the yen and the pound, but little change versus the dollar. Does this show that no matter how weak the fundamentals are in Europe, what matters is how much money one is printing?
Well, I think it shows that once you get to zero interest rates, there's limited movement in foreign exchange. I think although it's moved again down today against the yen and the pound, really against the yen it's been very range-bound all year, and similarly against the dollar. It's only sterling that's really done well, and I think that's it's partly a credit story. It's because the UK remains AAA, and there's been downgrades in the US, there's been downgrades in France.
And is it likely to breach that range anytime soon? Could you easily see 125 in 6-8 weeks?
In euro dollar? I think it's unlikely at this point. I think at the moment we're really moving very much with yield spreads or forward points, and unless you have a renewed banking crisis where you see a big blowout again in basis swaps and so forth, then I think it's going to be a struggle to get far below 130.
The US has growth of 2.2%. It was slightly weaker than expected. That's why we've seen the dollar down. But Europe has hardly any growth at all. How can you have the euro at 132.41, and even the pound for that matter?
Well, you can certainly make a case for sterling to be lower against the dollar, but if you look at the underlying long-term flows, there is a lack of real flow into the US. Most of the flow that we've seen has been safe haven related. There's really very little flow into portfolios, into equities, into bonds. It's safe haven, hot money, if you like. And you can see that also in the CFTC data, where you see there's a lot of speculative positions that are long dollars. So in other words, the big long-term investors are not putting money into the dollar. The dollar's being supported by a lot of short-term flows, but there's, I think, a reluctance to put more money into the dollar because a lot of these long-term investors are already overweight.
You just said there was a case for arguing that the pound should be lower. Surely, the Bank of England's decision is going to have an impact on the pound. It's going to decide whether or not to do more QE.
Yes.
Will they be thinking about this strong pound when they make that decision?
To some extent, but I don't think it's the central issue for them. You know, sterling's down, what, 25% on a trade-weighted basis since the beginning of the crisis. It's up a little bit since then. They'd rather it wasn't up, but in practice it's not up so much it makes a big difference. So I think at this stage it's much more a question of whether we need more QE to spur growth and inflation. And at this point, with inflation a little bit above expectations, they're probably reluctant to go any further, though growth has underperformed in the first quarter.
Now let's take a look at the yen, because against the dollar it's headed for its biggest monthly rally since July. What do you make of the efforts by the Bank of Japan to weaken the currency? It doesn't seem to be having a great deal of traction there.
Well, again, as I say, once you get to zero rates, there's really limited amount that you can do. If QE has a positive effect, as in Japan, on growth and inflation, you could argue, well, that's actually not going to have too negative effect on the yen. And we've seen that in the UK, for instance. When the UK's done QE, the anticipation of QE has been negative for sterling. But when QE's actually been implemented, it actually hasn't been negative for sterling.
Adrian, when the forex markets are as warped as they are by central banks taking action all over the world, how do you work out which currencies are going to rise? Which ones do you buy right now?
Well, I think for some time we've been favouring the Scandies, essentially because of their solid budget and current account fundamentals, and the prospects for higher rates in the medium term.
Higher rates maybe for the Canadian dollar as well?
Canadian dollar is another possibility. I think the only negative I'd say for the Canadian dollar is that their current account position has deteriorated somewhat in the last couple of years, so their current account deficit's now about the same as the US's.
Concerns about consumer debt there
and there's
as well.
concern about consumer debt, but that may mean that they have higher rates sooner rather than later,
right.
In which case I think the Canadian dollar will rise. So that's certainly another potential positive at this stage.
Adrian Schmidt, foreign exchange strategist even at Lloyds Bank Corporate Markets. We're grateful to you. Thanks very much indeed.
Thanks, Adrian.